Excellent. Before we start, I have to tell you, my grandparents were Swedish, not me. Everyone here has come up to me speaking Swedish, and I can't respond because that generation that came over in the 1920s believed that if they taught their children Swedish, they would somehow be handicapped, that you could only learn English to be a true American. So sadly, I don't have it. But I used to run the asset management business for Bankers Trust here in Scandinavia. So I have some background in this part of the world. And actually, when I received the invitation to come, I was absolutely delighted because one of the most significant developments in the world economy today is actually happening in this part of the world. And I think people don't recognize it. And it has to do with why Russia is becoming much more aggressive with the Baltic. And what I want to do is spend the time I have with you today explaining what's happening in the world economy that is causing this, and also, by the way, causing the Chinese to become much more militarily aggressive in the Pacific as well, because it's not random. It's not out of the blue. It's actually a function of some of the economic factors that we face today. Now, last night at dinner, we had a fascinating conversation at our table about how will the US pay off its debt? And my answer was, it won't. And everybody went, no, surely the United States will not default. And I said, we will default. We always default, by the way. The United States has a very, very long history of defaulting on its debt. When I spent time, in fact, with the Chinese leadership, and frankly the Russians as well, talking to them about what the world economy looks like, they're very interesting and they say, look, how did the United States pay for the American Revolution? How did the United States pay for the Civil War? How did the United States pay for Vietnam and the Great Society program period? They all were the same. And it's a form of default, which we have forgotten about, called inflation. Now, the problem with talking to you about inflation is everyone says, oh, this is going to be ridiculous. There is no inflation. There's only deflation. Every central bank in the world is telling us the only problem is deflation. In fact, they're going further and saying something we don't usually hear central bankers say, which is, we want to create inflation. Inflation is too low. And so we see record efforts by every major central banks to do everything possible to make the inflation rate go up. Stanley Fischer, the vice chairman of the Federal Reserve, recently said, until inflation goes up, we must be very careful about not stopping that process. And you say, but the Federal Reserve has started to raise interest rates, so there can't be any inflation. So this is where I want to begin the story today, is to explain to you how the Federal Reserve can both raise interest rates and let inflation go up, which sounds contradictory. But if you think about it, what we have in the world today is a record amount of monetary assets, right? A record explosion of liquidity. The amount of liquidity in the system today can only be characterized as emergency levels. And in fact, that's been the biggest complaint, right? That here we are 7, almost 8 years into the crisis. We're no longer in an emergency, and the Fed needs to begin normalizing because emergency level policy is no longer appropriate. So you raise interest rates one time with 2 years of notice. You tell the market for 2 years, we're going to do this. We're going to do this. We're going to raise interest rates by 1/4 of a point. Right? You give so much warning that when you do it, it doesn't really make any difference. And also, where are you raising it from and to? And the answer is, until you reach some kind of break even, you're not even making an impact. You're not tightening. You're just normalizing from absurdly low levels of interest rates, from absurdly high levels of liquidity to something slightly less absurd. So the way Janet Yellen thinks about this, which is important for you as investors to understand, is she thinks, okay, 2% technically is the target. Now, by the way, why do we have 2% as a target? It's very important to go back and rethink. Why is 2% the target? Is it a magic number? In one way, maybe it is. There's a guy called Bill White, who was at the OECD for many years, now at the BIS. He's considered the grandfather guru in central banking circles because he always calls the big events. He always gets it right. They still ignore him. But he's the guy who always calls it. And he says, why do we pick 2%? Because 2% inflation is a level at which you can take 2% out of the back pocket of an individual and have them not notice. That's the purpose of a 2% inflation target. Okay, so Janet Yellen thinks 2% is an average number. And we have been below average for so long, we should go above average for a while. So the target isn't 2. The target is something above 2. Now, this is very clear from Federal Reserve formal papers, but who's got the time to read those? I do. You don't. I'm telling you. What they say is we should go above the target for a period of time. Charlie Evans, who is the head of the Chicago Fed, very close with Janet Yellen, he will say out loud exactly what I am saying. We need to go above average for a while. Now, if the Fed comes out and says, we want inflation higher and we're going to go above 2%, you can imagine some people in the market might get a little uneasy. They might be a little bit of a panic about that. So the question is how to balance the two things. In the introduction, you mentioned knowing how decisions are made in the White House. Yeah, it's the same at the Fed. You want to do many things simultaneously. It's a bit like magic. So you want to say, okay, we're going to raise interest rates so that the hawks in the market don't get frightened, but we're going to raise them so slowly and from such a low level that actually it permits inflation to continue rising, just potentially at a lower speed than if we had done nothing. So that's kind of awkward to think about, but I think important conceptually, because every other central bank in the world is following their lead. And I want to be clear again about this point I made earlier. Inflation is a form of default. So what are the other forms, just so we can put this in perspective? Well, option one is the nation can wake up and say, we're just never going to pay you back. This is called an Argentine-style default. Some of you remember when that happened. You can say to the world, we are absolutely, for sure, definitely, beyond any shadow of a doubt, going to pay you back, but later. That's called a Greek-style haircut. So we've seen those as well. You can say to your own citizens, I know you've been paying your taxes, but we don't have enough money now to deliver all the things that we promised. So we're now going to ask you to pay more, and we're going to deliver less. So you can see that in the form of there's less money for the fire department, less money for the police department, less money for the National Health Service. I live in London. The National Health Service starts to say, oh, if you have a very complicated surgical procedure, now you have to make a financial contribution to that. Or there was talk at one point that if you wanted to jump the queue, get in front of the line, if you paid a little more, you could do that. Well, the problem with all of these is that, number one, they are vote losers. I can tell you, as someone who worked for the President of the United States and during a campaign, all of those are vote losers. All of those fundamentally break what I would call the social contract. And here in Norway, you have a very particular social contract between your citizens and your state. It's world-renowned, it's very famous. Not everyone agrees that it's the right kind of social contract to have, and maybe it's specific to Norway and its size and its history and its location, but there's no doubt, everywhere in the world, there's always a deal between the citizens of the state. I agree to pay my taxes, to abide by the law, and in exchange, I expect the state to deliver certain things, like education to a certain level, as one example. Well, today, because the debt burden is so big, there is a breaking of the social contract occurring in pretty much every nation. Last night at dinner, there was a question I had about how big is the debt as a percentage of GDP. And I said, forget that for a moment. If you tax 100% of Americans, 100% of their income, it's worse than Norway, right? 100% of their income. You still have a debt problem for another decade or more. In other words, it can't be paid. It cannot be paid. And the same situation holds true in the United Kingdom, across the entire Eurozone, and in Japan. So it has to be defaulted upon. So then the question is, what are your options? Well, obviously the ones I just gave you are all bad, politically bad, painful. Everybody always reverts to the final option, which is inflation, because everybody loves inflation, especially at the beginning. Inflations are great. The value of your house goes up. Everybody goes, yeah, I'm richer, I'm better off. And interestingly, they don't notice that their prices are rising. They don't notice the deterioration in the cost of living. That's partly because some of it's a little bit invisible, especially in the early stages. As you say, I talk a lot about signals. So one of the economic signals I find interesting is everywhere I go in the world, I raise this phenomena that I call shrinkflation. And let's see if you recognize it. Shrinkflation is when something that you've been buying for a long time, like a bag of potato chips, you're paying the same price, but you open it and there are fewer and fewer inside, right? Or a can of herring. You open it, and then there's like a bigger gap between the fish and the top of the tin, right? Or, I don't know if you guys are familiar with Cadbury's, the chocolate company, right? We all know Cadbury's. Cadbury's announced that the Cadbury's cream eggs, no longer 6 in the box, now 5. Yeah, this is serious news in the world economy, right? And what does it tell you? It tells you that there is margin pressure. It tells you companies are feeling their costs going up. Now, how can that be? Because the Fed says there's not enough inflation, no sign of an inflation problem. Bank of England says the same. Surely the Eurozone has nothing but deflation. Japan, nothing but deflation. And yet, all of these places I go to New York, I go to Chicago, I go to the Midwest, California, Texas. What's the most popular topic of discussion? Also in London, also in Paris, also in Berlin, also in Dubai, also Hong Kong, also Singapore, Sydney, Melbourne, and Tokyo. The rising cost of living. That's what everybody talks about. They talk about rents are rising. Property prices are rising. We've just seen record prices paid for properties in both London and New York. And for those of you who do Twitter, I just put up this morning some examples of what I'm talking about today on Twitter under Dr. Pippa M, because unlike you, no one else in the world can spell Malmgren. So I had to put M on the Twitter handle. Why are property prices going up? Well, I have to tell you, the clients I work with, sovereign wealth funds, pension funds from all over the world, the minute they saw central banks are going to try to create inflation, they're going to flood the markets with liquidity, they're going to take us to record low interest rates. What do? Well, you say each piece of paper, whether it's a dollar bill or it's a pound note or even if it's a Norwegian kroner, each one is worth less if there are more of them. Good old supply and demand. And therefore, they don't want to own paper financial assets. They want to own hard assets. And so we saw a huge investment in the last, again, 5 to 7 years, all going into hard assets. So property of all different kinds, especially productive property, agricultural farmland. We see record high prices paid for properties all over the world. Even in China today, where the property market has fallen substantially, rents are still rising by 6% per annum. So the return on an investment is still there. So that's a very different understanding of what the world looks like than the usual assumption there is nothing but deflation. So with that, now I want to make a big jump and help you understand, why is this connected to military events? Now, this part of the world has definitely been on the receiving end of military events. We have seen a record number of air incursions and sea incursions by the Russians into the Baltic in the last few years. And I would argue this is not coincidental with the decisions by the United States and the West to solve their debt problem by reaching for inflation. When I spent time with Russian political leaders and Chinese political leaders, they said to me, of course, it is completely obvious that the US is not going to pay us back, right? Let's think about it. Who has been the creditor to the United States, to Britain, to Japan? Who has lent us the money? Well, the answer is China and many emerging markets, Russia included. So yes, we will pay them back the $100 or name the number that it is. We'll pay them back. We said we borrowed $100, we'll pay you back $100. But what will it buy? Smaller apartment in New York, less potato chips in the bag, less herring, right? All these things because they go more expensive. So the value is lost. So that's the importance of inflation. Now, what does it do to the value of certain assets? Let's think about Ukraine. Ukraine is the 4th largest food producer in the world. Now, if I were looking at it like a trader, and I said, okay, this piece of a monopoly board can either belong to me or someone else, I would say, I think I want that. In a world where every central bank is trying to create inflation, I would like to own the 4th largest food supplier in the world. So is it really total coincidence that Russia becomes more aggressive with Ukraine against this backdrop? Maybe not. Let's think about food for a minute. Food is a very, very interesting thing because it doesn't have the usual story that economics provides. Economics says usually people will substitute one thing for another, that there's what they call elasticity. So if the price goes up here, you will change to something else. Yeah, but the problem is you can't go without food, or not very long. So what we see today is the United Nations data on food says that food prices are flat. But when you look at local communities in different parts of the world, what you find is food prices are starting to rise. And people feel this. In emerging markets, workers spend something between 60 to 90% of their income on food and energy alone. They've been lucky on the energy front, although I'll come back to that. That's also not what it seems, but not so lucky on food. And so suddenly we have to think about what is the true value of certain kinds of foods. And I would argue today that, especially here in Norway, you need to be less worried about the oil price and much more focused on the price of fish. And you say, that's crazy. You're going to substitute fish for oil. No, but what I am saying is there's a reason we just hit a record high price in salmon prices here in Norway. And it changes the value of certain assets. So the next one I want to show you, I'm very glad to say, is probably a place you will recognize. Everywhere else in the world, nobody knows where this is. It's an island called Bornholm in the middle of the Baltic, which I have to tell you, pretty much nobody outside of Scandinavia has ever heard of. Now, what happened this last summer in Bornholm was very, very interesting. The Russians held the largest naval exercises since the Cold War in the Baltic. This is the period when the Swedes found the submarine pretty much in the middle of Stockholm and cleverly said, we have no idea who this belongs to. Right? Clever of them to do that. But it turns out the Danish intelligence services released a report which said that at the same time, it appears that what Russia was doing was physically practicing taking control of this island, Bornholm, in the middle of the Baltic. And interestingly, they chose the week that the Danish hold their equivalent of Davos. So every major political leader of Denmark was on that island during the week that they were practicing taking physical control of the island. And it raised some very interesting questions, one of which was, would NATO defend Denmark? And the American response to that was, of course, yes, absolutely. And let's recall at the time, the head of NATO was a Dane, which was partly why this made sense. But the second answer, when you got to the bar with the same people, was, Americans don't really know where Denmark is. It's kind of hard to defend a place when you don't really even know where it is. Although I have to say, we're in Afghanistan, so maybe that's no obstacle. When they draw maps of where Americans think Afghanistan is, it starts in the Baltic. So I don't know, but it certainly raised a very interesting question. But my question is, why Bornholm? Why a submarine in Stockholm? What is happening in Scandinavia that's so important? And I would say the answer, which is not what one expects, is fish. The answer is, in a world where every central bank is trying to create inflation, where food prices are rising in specific locations, think about it. What happened to the price of fish in Russia after the food sanctions went in after Ukraine? Up 60% in 2 weeks. Well, in a world where fish prices are up 60% in 2 weeks, and that's my principal protein source for my people, I need more of it. And I will go where I can get it. And where can you easily get it? Oh, it's right here, right off our coastline. Last night I came in, I had a drink with a friend of mine from university days who's lived here in Norway for 25 years. And he says to me, is it possible that Russia is basically seizing northern Norway, but we just don't realize? We just don't get it because we don't have anybody up there, right? You got fish up there. There's no people, really. And I think this is something to think about in a world where we see borders disintegrating all over the world, where the reach for assets is beginning to happen very aggressively. This is worth thinking about. And again, in the context of everyone worrying the oil price is so low and what will happen to the Norwegian economy, my question to you is, who's investing in fish? Because that's where I'd be putting my capital. I think there's going to be a huge amount of money made in this arena. But it's not just in this part of the world. It's also China. China's view is we're going to be defaulted upon. The way in which the United States and the West is defaulting will definitely push up food prices. Therefore, we need to reach for greater control of assets. So you may or may not have heard about this little island that they have built in the Pacific, which is called Fiery Cross. It's been in the news quite a lot lately. Fiery Cross was a series of rocks that were just sticking out of the ocean. Nobody ever lived on them. And what China has done is to build an absolutely massive landing strip in the middle of nowhere in the Pacific. So you ask, what's in the Pacific that's so valuable to China? I would say fish. 10% of the world's fish supply is right there off their coastline. Right now, there are other nations that say it's mine. Vietnam, Philippines, Singapore, various parts of Asia all dispute who owns this territory. The Chinese view is, you're defaulting on us, so we're not going to even have an argument anymore. That's mine now, because I can't feed my people any other way, right? In China, you can't grow enough food. It's not possible. Not only is there insufficient arable land, there's insufficient water. And the water supply they do have has been so heavily degraded by lack of environmental controls, I'm not even sure it can be cleaned. So you can put it on agriculture, but it will kill it. So you need to find food resources from somewhere else. Also, I have to say, for both the Baltic and for the Pacific, for Russia and for China, there's another asset that's worth thinking about, and that is shipping lanes. Who controls the shipping lanes? If you are dependent on bringing in raw materials and pushing out raw materials, bringing in and sending out finished goods, Who controls the shipping lanes becomes a very critical factor. Well, the fact is, when the Chinese look out at the South China Sea, what do they mainly see? The US Navy, which completely dominates all the shipping lanes. As a nation, we say we're doing this to secure open traffic for everyone. The Chinese view is, no, if it's in your interest. So therefore, there's a strategic imperative for us to gain greater control over the shipping lanes. And the Russians would say exactly the same thing about the Baltic. And it all comes back to what's actually happening to prices versus what we think is happening to prices. So as investors, what I find is we think the problem is prices are not rising, it's deflation. But what is actually happening to food prices is they are going up. So now let me tell you about pork and pigs. I know everybody likes to talk about more standard commodities, but you know, it's interesting. What's the most important critical foodstuff in China? Pork. That alone has required the Chinese government to create a buffer of stocks, because if the pork price goes up, you get riots. You get social protest. You recall recently when the stock market just began to falter, right? And everybody was getting very nervous, some months ago. So I happened to be in China at the time. I was meeting with some of the senior officials, and I said, how nervous are you about the fact that the stock market's starting to fall apart? And they leaned across and they said, you know, less than 10% of the Chinese population own stocks. It's an elite group. It's not that important. I mean, the optics are not great, but it's not the end of the world. You know what's really worrying us? I leaned forward. No, tell me. The price of pork has gone up more than 50% in 1 month. Now that is a big problem. So when we think about what's happening to food prices, I always say it's no use referring to the UN data on global food prices, because the person working in China doesn't care. The person in China cares about what's happened to the price of pork, which is my most important food staple. If we go to another part of the world, India, what's the most important critical food staple in India? Onions. Onions. Now, who follows the global onion price? No one. Well, I do. Okay. And everybody's like, she's so weird. She follows onion prices. Yeah, but guess what? There's a wonderful paper by the World Bank that says, the title was roughly, Why the Price of Onions Can Cause the Government to Fall in India, and Often Does. Because it does. Pulses, by which I mean chickpeas, right? Which, you know, who follows chickpea prices? Nobody, except all of India. That's the second most important food staple. And what has happened to the price of both onions and chickpeas in India during the last few years? Exponential leaps. For the last 5 years, we've had some years where the prices have gone up 300% in a single year. If you Google it right now, you will see there's huge controversy in India today about the fast rising price of chickpeas and lentils. We may take this for granted. We may say that's not important to me, but it's important to a huge number of people. So do they feel inflation? They feel inflation. So what's the solution? And now I want to talk to you about what I think is going to be the single most important investment strategy that you need to be aware of for the next probably 20 years. It's called, in short, OBOR, O-B-O-R. The long version is One Belt, One Road. Has anybody heard of One Belt, One Road? This I find fascinating. So let me explain One Belt, One Road. It was announced by Xi Jinping a couple of years ago. He said, we are going to build a physical infrastructure, a road which will go from China through Central Asia into the Middle East and into Europe, and a maritime road, as it were, what they call the Maritime Silk Road, which will go on the waterways around India and into the Middle East and into Western Europe. Why? So let me back up a little bit. So a couple of years ago, I decided to write a book because I felt there were so many interesting signals from pork prices and onion prices that everybody ignored. And one of the things I found was that there were big developments that the whole market could be ignorant of for amazingly long periods of time. And so the question was how to explain this in plain English so that people could understand. And one of the ideas I came up with was this. In the past, we had a perfect circle of capital, and all of you invested in it, and all of you profited from it at some point or another. The perfect circle worked like this. China and emerging markets made very cheap and expensive stuff. We in the West bought it. And so we gave them our cash, and they took the profit, but they didn't put it back into the economy because if they had, they would have unleashed a horrible inflation. So instead, they took the money and they put it in the US Treasury market, the British gilt market, the Western European debt market, into Japanese debt, German bonds, etc. And this systematically pushed down our interest rates, which allowed me as an American to get a bigger mortgage and a bigger house, which needed more stuff. So I filled my house with more stuff. That gave the Chinese and other emerging markets more cash, which then they put back into the treasury market. And that's what I mean. There was a perfect circle of mutual interests, and everybody benefited during this period. China got more jobs. The US and the West got lower interest rates and bigger houses, more assets. All went well. Until the financial crisis. Financial crisis happens, everybody stops buying. Suddenly we have an emergency, interest rates go down, but now nobody can get a mortgage, right? Because banks stop lending. And the Chinese start to say, wait a minute, what is the solution to the debt problem? Since they are not going to default outright like Argentina, they're not going to default with a haircut like Greece, they're limited in defaulting on their own citizens because they'll get thrown out of office, they're going to go for option 4. They're going to do what they always do, which is inflate. So what are the consequences of this? I have to say, if I were in the Chinese government, I would also say, why am I buying the bonds of a nation that's clearly choosing inflation as the solution? This is a stupid trade. So I don't want to own any more treasuries. And sure enough, over recent years, what have we seen happen? The Chinese stopped buying treasuries. In fact, now they're selling them very aggressively. Same for other emerging markets. And instead, they say, we're going to take that same money, and now we're going to build one belt, one road, which is effectively creating special economic zones outside the country. We can sell the excess capacity into those markets, so all our concrete producers who have nothing to do in China, now they will have something to do in Kazakhstan, in Djibouti, frankly, in Germany, in Belgium. They start to buy infrastructure. They want to finance the high-speed rail links in London out to Birmingham. And suddenly you find this is where Chinese investment is going. I think a lot of emerging markets are going to follow them because they've created an institution now called the Asian Infrastructure Investment Bank. How big is that? I can tell you it will be bigger than the World Bank on its very first day of operation. Who's not going to sign up? Everybody's going to sign up. So this one belt, one road means capital's moving in a very different way. The perfect circle no longer works. Now, if I were Janet Yellen and I understood this, I too would be very careful about raising interest rates. I would want to go very, very slowly because I don't want to scare everybody else who is still willing to buy US treasuries. And I also don't want to scare them with the inflation risk either. It's a fine balance. So you end up in a situation where you ask, okay, then what else do I invest in? Where do I put my money in this world? And I put up an image that I like a lot of Einstein, who said, compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. So don't be one of the ones who pays. Understand the background I've described to you is going to cause interest rates to go up a little, but inflation potentially to go up by more, which is normally a contradictory thought, but something that you really have to decide for yourself. Where do you think we're going? Are they going to fail in the effort to create inflation? Are they going to succeed? My own view is chances are, if they really want it to happen, they'll make it happen. It's not hard to create inflation, it just takes time. Even in the Weimar Republic in Germany, they tried for 4 years. Nothing happened, nothing happened, nothing happened, and then suddenly, it happened. So let's think about what our personal views are about interest rates and inflation. And I would finish by saying there is only one answer to everything that I've said, and that is innovation. And this is the one area I find that investors tend to shy away from because they want a done deal. They like things they already understand. It's hard to invest in stuff that you don't understand. But the good news is all of the forces that I'm describing have profoundly changed the world economy in ways that you can invest in. So I'll just give you a couple of examples to finish, and then we're going to stop to allow time in the program for the next speaker. One of them is, as emerging market workers have started to say, hey, I've got inflation, you need to pay me more. I no longer believe I'm going to be rich before I get old, so I don't want to wait anymore, you need to pay me now. So wages start rising. Well, this is good on one level, but bad on another because it means China is no longer very competitive. In fact, wages in Mexico are now 20% cheaper than wages in China. So if you want to invest in the world's lowest cost manufacturing zone, it's called Mexico right now. It's not called China anymore. And in fact, manufacturing is moving from China to the United States, particularly the Midwest. What's really interesting is watching Chinese companies move to the United States. When Chinese companies start building production facilities in the Midwest of the United States, something profound has happened. So for example, how many of you use Apple products, right? Like everybody. Foxconn. Foxconn assembles Apple iPads, Apple computers in China. They are the second largest employer in China. They employ 1.2 million people. And what have they announced? They are building a production facility in Pennsylvania. Hello, something has changed. There's an innovation there that we need to pay attention to. So this is what I mean. Another example is that business models have been blown up by everything I'm describing, including businesses that are now finding their costs are rising so much they have to adapt. So they move their place of business. They change the way they produce. And suddenly the door opens for investors to come into something new that wasn't there before. Silicon Valley, for example. Everybody likes the idea of being somehow connected with a unicorn in Silicon Valley, right? Something that produces thousands and thousands of % return. But I go to Silicon Valley, I talk to all my friends who are there, and you know what they all say? The cost of living in California is going so high, I can't afford to live here anymore. While I wait for my innovative company to make money, so I am actually moving my residence to Texas. So everybody in Silicon Valley is moving to Texas. Why? Because the second biggest Silicon Valley in the United States is in Austin, Texas. And it has 0 taxes for personal income. So suddenly, bang, everybody moves. And I have to say, if I have to pick a part of the United States that's the most innovative in high tech, it's not Silicon Valley. It's Austin, Texas. It's a different location. So to finish, I'll give you a couple of personal examples of what I mean. Because one thing I've argued is, everyone says, what should I invest in? And the real answers to that are not this sector versus that, or equities versus bonds. We're no longer in a world where it's a binary set of decisions. Some equities that have pricing power are going to do incredibly well in the environment I have described. Last year, the top performing companies in the equity market were blue chips. Makes total sense to me because they have pricing power, right? Companies like Kraft, they just raise the price. You still buy whatever the food product is. They put half as many potato chips in the bag, but you go, well, but it's Kraft. I'll still buy that. So it's not about in or out. It's more about what is it that you're investing in. So, for example, when I wrote my very first book last year, I found none of the publishers were interested. They said, nobody cares about economics. This is before the Piketty book came out. And I said, but I'm talking to live audiences all over the world, and everybody is interested in economics if you put it in plain English, if you don't do it in math. They were not interested. So I said, fine, I will crowdfund this. So crowdfunding. Now, how interesting that more than 80% of all the financing for crowdfunding businesses is coming from hedge funds. Why? Because the rates of return on crowdfunding are much bigger than the rates of return on hedge funds. What does that tell you? It tells you the real economy is performing better sometimes than financial investments. So now we have to really think about what are we investing capital in? Where are we deploying it? I have to say the real economy is proving to be sometimes a better place of returns than what we expected. Lending, for example, to real economy businesses in the United States, in the United Kingdom, even across Europe, you can have an investment, a loan collateralized 3 or 4 times, and you're getting maybe 10 to 15% return per annum. That's not bad. That's pretty good. So suddenly, real economy businesses become much more interesting. By the way, if any of you in this audience know of a fish business here in Norway, I'd like to know about it, because I suspect those guys are going to do very well, right? That's a real economy, real demand, rising price, purchasing, pricing power environment. That's investable. So this is what I mean about being innovative, because in the end, the answer to the question, what's going to happen to the world economy, which everybody has, is it all depends on you. Are you going to be afraid? Are you going to choose deflation as the likely outcome? Or are you going to be innovative? Are you going to say, oh, maybe inflation is possible? Whatever you conclude, that's where capital's going to move, and then that's what will happen. My conclusion is I'm an optimist about human beings. I think everybody wants to find a way to get returns, and money is very clever, and it will. And it will find a way to change the environment. So with that, one last little thing, because I know everybody's going to ask, and I was here this morning for Ian's presentation, and because I worked in the White House, the question is inevitable. What about American elections? But this is innovation too. And I would say as we look around the world, what we're seeing is the public everywhere is saying, I feel pain. I feel my cost of living going up. I'm afraid of what the future holds. Interest rates are starting to rise, so now I'm a little scared. I'm not happy with the current political leadership. I want someone new. Now that was the impetus behind the Arab Spring, along with the rising bread price, by the way. And I would note the bread price in the Middle East right now is rising very rapidly. So we should expect more of that. I think that this is the impetus behind the voters in Western countries starting to choose people that we used to think of as impossible. So Jeremy Corbyn in the United Kingdom, Donald Trump in the United States. So I think it's a function of the economics that the public is saying, I choose to innovate not just in the economy, but in the leadership. I want somebody new, given these new pressures and strains and uncertainty. And we shouldn't be surprised by this. So I've argued for quite a while that this anti-establishment approach is a function of where the world economy is, and we can expect it to intensify. I'm hoping that the United States in particular has a strong enough constitution, strong enough institutions that even if we do elect Donald Trump, we can survive it. Maybe that's the thing to think about. But it's an example of innovation, and we should think about that too. The Brexit idea for the United Kingdom. Will Britain leave the EU? My view is the public interest in that is way higher than the polls are showing. The risk of a Brexit is much higher than we realize. It's an example of the British innovating their way out of what they perceive to be a constrained environment. So this is a different form of innovation. So I guess the thing is, what I'm trying to say is, we think about innovation too narrowly. It's not just a gadget. It's a way of thinking. And maybe if I finish on that note, that's enough for today. But I can give you a lot more examples of what I mean by interesting signals that are not what you would expect by putting them up on Twitter and social media. And I'm always delighted to have a conversation. And so if anybody wants to chat about that, I will be available. And thank you very, very much for your time. I think we've got to go. Do we have time for questions?
Yeah. Well, let's see if there are any. Yeah. Yeah. We can wait. Thank you, Pippa, for a very interesting and thought-provoking speech. Are there any questions for her, either on question cards or if you want to just raise your arm, get a microphone? Late in the day, perhaps. I have one question, which is, if you look at soft commodity prices now, I'm thinking about corn, wheat, and so on. They're in a bit of a lull, so the price of corn, for instance, has fallen from $7-something per bushel down to $3-something. So just wondering, how does that fit into the context you described earlier with the pressure on pulses and pork and whatnot?
Yeah, again, it's so interesting because cattle prices, for example, in the US, Texas especially, are so high that we're seeing the return of cattle rustlers, literally people who steal your cows in the middle of the night because it's worth stealing them. They're so valuable now. And actually, we had, for a period of time, people stealing wheat as well. They were literally picking up the wheat bales and taking them away in a truck. So part of the question is, what is the actual price in the local environment? And that's where I think we start to see a splitting apart, a distinction. Let me give you an example that's not those. It's energy, which I mentioned. I forgot to give you the conclusion, but it's the same phenomena. So technically, we have really low oil prices, right? But we're paying record high electricity and natural gas prices in the US. How is that possible? Pacific Energy, which is our biggest natural gas company in America, has just announced the biggest price hike in 9 years. And electricity prices in the US are at record highs from the Midwest west, partly because of the drought. But nonetheless, again, do we have record low energy prices or do we have record high? The answer is we have both. And I think agriculture is a similar thing. And it also depends on what kind of wheat. Some are selling at higher prices than others. We need to be more granular rather than general. It's what I mean about forget the UN data because nobody cares about that. They care about the price that matters to them. So.
Great. Well, let's give another round of applause for Pippa.
Okay.
Thank you very much.
Right. Thank you so much.